Hello, everyone. I hope you are all having a wonderful weekend. The stock market this past week did exactly what I expected it to, which was a whole lot of nothing. That being said, we are in the weeds starting on Monday in regards to seasonality going back to 1950 in the S&P 500. August and September are the two worst months for stock market returns. Now, if there's any light to that negative story, if we go back the past 20 years on stockcharts.com and look at the SPY returns, you can see while August and September is low, they are not the worst 2 months. January and June are. That being said, well, June, February, and January are. But that being said, August and September are still kind of weak, but not that bad in the last 20 years. So we take that two seasonally worst months of the year, August and September, with a grain of salt going back to 1950, because going back to 2002, which the past 20 years, August and September is not that bad. And then this is what I normally like to do. If we think there's going to be a pullback in August and September, which I'm not 100% certain about, I have enough stocks out there, big caps only, that are leading, and we'll go ahead and look at the internals as we wrap this up. But guys, my key metrics are always this. This is the 200, this is the 100, this is the 50, this is the 34, 21, and 9. Are they all stacked properly? Yes. Are they all trending higher? Yes. If we pull back, I would expect all of these price levels that you see, these major support levels, previous resistance zone areas, and the moving averages to all be potential levels of support. There is no way I'm going to be bearish in the overall market until the Fed starts hiking rates. And then I'm going to need to see 2 to 3 successive hikes in a row at a very rapid clip before I'm even going to remotely get bearish in this market. That being said, if stocks pull back in August and September, will it shock me? No. Now listen, last August, we got a rally. But look at what happened in September and October, which to me, it's August, September, and October are the weak months. We're not in the clear until the end of October, when our seasonal sweet spot from the beginning of November to the end of April starts. But you can see here, there was chop and consolidation. You'll notice it found support at those key moving average lines. If we pull back, that's what I expect. And that's if we pull back. We're entering a loose squeeze on the SPY. If we break out above these highs, guys, in the last video lesson, I showed you how to work reverse Fibonacci retracement for symmetry, taking it from this high to this low projections. And then I taught you guys how to use the Fibonacci symmetry to figure out where a price is going to go by connecting this high to this low, or that low to this high to this low right here. And all of these lines are the target levels that we could see the SPY go to. So with everything stacked up, it doesn't pay to be bearish. Now, can you be bearish on the IWM and small caps and mid caps? Absolutely. They've gone nowhere since February. And if we look at a ratio chart between the IWM, SPY, and QQQ, it makes sense. They just have been out of favor. But this is not a good-looking chart. But at the same time, we're still above the 200. All the moving averages are wrong here. Just don't focus on this area of the market. Intraday day trading, I focus on small caps outside of earnings season. During earnings season, the focus is always on big caps because all traders are focused on the earnings. But on the end-of-day swing side, I focus on small and mid caps. Do I need to add big caps to my end-of-day methodology? Absolutely. Am I working on things? Absolutely. Got scanners in Telechart via EMA stacks, positive PPO, earnings and sales growth requirements, liquidity requirements. I've got them ready to go. But currently on the end-of-day swing side, it's small caps and mid caps for me, and they just haven't been happening. Now, quarterly and long-term portfolios are basically only big caps. So, as part of my service, if you aren't happy with the lack of end-of-day signals If you don't want to day trade the small cap, low float stocks that I like, you always have the option to do the quarterly portfolios and long-term trades. I have those. But for right now, as long as IWM is out of favor, it's all about the big caps. That SPY, the loose squeeze, the QQQ, same situation applies. Everything is properly stacked. We have a loose squeeze. Could it fire lower? Absolutely. But then this old resistance level is an area of support. This low is an area of support. All of these moving averages are areas of support. This low and this low. It's just hard for me to be bearish here, guys, even with the bad seasonality. Could we chop around? Could we pull back? Yeah, but it's just impossible for me to be bearish. So that's what I see on these charts. DIA, same similar situation. As long as you avoid the small and mid caps, we're going to be fine. But that being said, why do I expect a short-term pullback? It's not necessarily evident in these charts. Let's take a look at the other charts that I look at. Chart version 7, because it has the balance of power indicator and it applies it to the price up on the top for this window that I'm using. It hasn't really mattered, but when we get red balance of power with heavy selling in the volume, there's at least a period of chop. And if we just look at the QQQ lately, we had the chop here, we got red bop here, we went sideways before moving higher, and even when we had red bop here, we kind of had chop, more red bop here, sideways, then higher, red bop here, a sell-off, red bop here, more chop, now we have red bop here. So balance of power, by the way, for bop. So I'm expecting some more chop short term. The DIA, there's a lot of red in this chart. Guys, where's all the green? Green is good, red is bad. We can still fight off the red. Bears really can't get anything going. But the whole point is these charts aren't really glowing and aren't really telling me that they want to move higher. Can they move higher? Absolutely. Can they move lower? Absolutely. The highest probable odds are we're going to trade sideways. Now, that being said, well, did you see Amazon? Yeah, Amazon, that was ugly. However, did you guys see ALGN? Did you guys see WST? Did you guys see AMD? Did you guys see Snap? But did you see Pins? Yeah, listen, I've seen all of them. But overall, if they were all doing what Pins and Amazon was doing, that would be one thing. But they're clearly not. So that's why it's almost impossible for me to be bearish on this tape. Now, want to continue to focus on the overall market. How are we looking internally? Let's go to stockcharts.com. Now, this is a line chart because we're going to look at all the ratio charts. But I want to look just to point out, see how SPY has been moving up since March? RSI, though, lower highs. MACD, lower highs. PPO, lower highs. So short term, could we pull back? Yeah. But look at the accumulation distribution line. Does that look bearish to you? Sure doesn't to me. QQQ, moving up. RSI was good here, but now lower highs from here to here while price is moving up. Lower highs MACD, PPO. This is negative divergences. Wouldn't surprise me if we pull back. That being said, look at the accumulation distribution line. Does that indicate institutions are selling the tape as we move higher? No. The DIA, same thing. RSI, MACD, PPO, negative divergences, but the accumulation distribution line still looks good. And if you guys want to see something that's crazy, IWM, it's not crazy, but the IWM, is the accumulation distribution line slightly less aggressive than the others? Yeah, but that being said, the accumulation distribution line is still near the highs despite the IWM pulling back. So it's hard to be too bearish here. Now, at the same time, I've told you guys, IWM is my sweet spot on an end-of-day basis, swing-wise. Is it any surprise that all of my huge winners came from before February? And since February, there's been very few. And since June, the vast majority have been small losses or flat, while there have been very few winners. There's been a couple of big winners. We've had a couple of nice ones, TACT, HRC. Those have been two great swing trades. But as long as the IWM ratio to the SPY is trending lower, they're not in favor. I'm not going to increase size, guys, or go crazy. IWM to QQQ, there you go. QQQ to the SPY, this is telling you where you need to be. Now it's flattening here a little bit, but that move higher tells you that it's all about the QQQ right now. This is going to be the inverse because it's SPY to the QQQ. When that's uptrending, we focus on SPY stocks. When the IWM's focus is trending higher, that's where we focus. But right now, it's all about these Qs, and that will continue to be my area of focus. Now, what I like to do is look at all the internal indicators, and we'll just end the video lesson with this. Let's see if this moves whenever I do this. Damn it, it does. But oh well, we don't need the accumulation distribution line. So when we look at the internals, we look at the advanced decline line of the Dow Jones Industrial Average, and we can clearly see it's fine. Mid caps, not too bad, but there's no positive divergence. NASDAQ advanced decline line, some negative divergence there. That's not good. The Comp Q, the NASDAQ 100 advanced decline line, once again, proving this is the area of the market we need to be focused at. The NASDAQ 100 is leading. This is the New York Stock Exchange advanced decline line, not confirming with the SPY. This is the common stocks only of the NYSE, not confirming with the SPY. This is the S&P 100, once again, a very thin index, continues to work higher. This is telling us big caps should remain our focus for now. Small caps, nope. S&P 500 advanced decline line, okay, confirming, that's good. NYSE isn't confirming, but at least S&P 500 is. Now we're looking at the volume of the advancers versus the decliners. Dow Jones Industrial Average doesn't look too good, but there's nothing serious there. Mid cap doesn't look good, but nothing bad also. How about the NASDAQ? We're looking good. No issues there. How about the NASDAQ 100? We're looking good. No issues there. New York Stock Exchange advanced decline volume line, not good. NYSE common stocks only advanced decline volume line, not good. OEX advanced decline line, middle of the road, not much to really take away from there. Small caps advanced decline volume line, not good. And now the S&P 500 advanced decline volume line, not good. Dow advanced decline line, we're back to it. So the point of all this was to go through all those. It's all about the Qs, baby. It's all about the big caps. This advanced decline line in the Dow Jones Industrial Average of only 30 stocks looks good. You got the Dow Jones Industrial 30 stocks. You got the S&P 100 stocks. You got the NASDAQ 100 stocks. It's a very thin area of leadership, and this is why I want everybody to remain open-minded to any and all possible outcomes. What if the NASDAQ 100 is telling the truth about this market, and that the leadership that we're seeing there and the weakness that we're seeing in the S&P 600, the S&P 400, where's my small cap advanced decline line? There we go. What if the correction has already run its courses in the overall sub names in the stock market? The big caps held up. We're going to get through this period, and then all the small caps and mid caps are going to join the big caps again for another assault to all-time highs. Very possible, very plausible. So I want everybody to keep an open mind. I think I forgot to bring that point up in the last public video lesson last weekend. But all these negative divergences could easily be forecasting a severe pullback. And if more stocks start doing what Amazon and PINS did, then that'll be a problem. But when you look at ALGN, AMD, WST, and Snap, and all the other stocks that have beaten earnings and raised estimates and are moving higher, it's possible we're seeing an internal correction that eventually is going to run its course, and the market's just going to keep on melting up. So I just want everybody to keep that in the back of your mind. It's a very big possibility. It's just the way it is right now. There are times when it's clearly obvious the market wants to downtrend and that all hell's about to break loose. There are periods of time when it's obvious that the market is healthy and that we want to run higher. Then there's period of times like now where we have a lot of mixed messages. We're going into some seasonally bearish times, and it's smart to just be safe. I'd rather be safe than sorry. I will get aggressive again when you see this line get above these moving averages, this downtrend line connecting like, don't let me do, got to annotate it. And we get above that downtrend line, get above this resistance level, get back above those moving averages, I'm sure my end-of-day swing trades are going to be making me and a lot of people a lot of money. Right now, though, hey, man, it's all intraday for me. Long-term and quarterly term, big caps. Short-term, I'm day trading only right now. I do have some end-of-day swing positions, but the longs are there's just not that many right now. And I would love to give everyone a free trade idea for Monday, but going into Monday, following Friday's evening scans, I have none. I didn't get any signals. I got 3 signals that were maybe actionable. They all have earnings on either Tuesday, Wednesday, or Thursday this week, so not going to happen. All right, everybody. I love you guys. Thank you for watching. I'll see you back here next weekend. Aloha.